Hello everyone, this is Professor Srinivasan here, back again with yet another concept in finance. Have you ever heard of the term barbell strategy, particularly with respect to bond trading? Well, it sounds something like you handle in a gym, but it is actually a very smart way to balance out risk and returns. Now, here's how it works. Imagine a barbell in a gym. Do you know how a barbell looks? Weights at both ends with a thin bar connecting in between. In terms of bond investing, the two ends represent your portfolio. On one side, you invest in short term bonds, which give you a slightly lower return but are generally more safer and gives you the flexibility to reinvest the proceeds immediately in case interest rates rises. And on the other side, you have long term bonds, which are slightly more risky, give you a slightly higher return, but they lock in your money at a particular higher rate of interest. Now, notice what is missing: the thin bar in the middle. This strategy skips that portion altogether. Why? Because this approach gives you enormous amount of flexibility when you are creating a bond portfolio. Short-term bonds reduce your risk if interest rates rises, whereby you can reinvest the proceeds of those short-term bonds immediately at higher rates, while the longer-term bonds give you a stable and a higher return. Together they create a balance, just like barbell. Let's understand this with the help of an example. Suppose you have rupees 10 lakhs to invest in a bond portfolio. Now, one of the ways which you could do it is invest 5 lakhs in short-term bonds and the remaining 5 lakhs in longer-term bonds. If interest rate rises, then you can reinvest the proceeds of the short-term bonds immediately at a higher rates. But on the other hand, if interest rates fall, then your investment in long-term bonds, which you had earlier invested when the rates were higher, will continue to give you higher returns. So the barbell strategy mixes safety with growth, helping the investors manage uncertainty in interest rates, particularly when it comes to bond investments. It's simple, balanced, and just like your gym, it keeps your portfolio strong. If you found this video useful, do consider liking it, sharing it, and do not forget to subscribe to my channel. Ciao.